Hello and welcome to Breaking News. I'm Sarah Jacob. Prime Minister Modi last week said that India has the third largest startup ecosystem in the world and that they're turning out to be a powerful vehicle to fulfill the dreams of the common Indian youth. Yet at the same time, we're now increasingly hearing headlines of startups going in for massive layoffs, whether it's Cars24, Vedantu, Unacademy, Meesho, even some unicorns. Is it time to sound the bugle on an impending funding crisis for startups? Is the shine coming off on this ecosystem?
Employees of M-Fine sitting on the footpath outside a telemedicine service startup at HSR Layout in Bengaluru after having been laid off, staring at an uncertain future in the middle of a pandemic.
Actually, it is very difficult that all of a sudden we had a plan layoff and we have a huge amount of EMIs to be paid and day-to-day expenses of a home. So,
in the latest round of layoffs, around 600 M-Fine employees were fired from their jobs, adding to the already massive layoffs by companies like Cars24, Meesho and Unacademy, where at least over 2,000 employees in the last 2 months were given pink slips.
So we have definitely changed our goals for the year. Right. It cannot be only growth. Right. It has to be growing profitably. So we have changed those goals, basis which we have prioritized certain things and deprioritized certain things, which is, as I said, would be happening everywhere in the ecosystem. So we have done that. We are a lot more focused on margin right now.
Some of the startup founders say one of the major reasons for these massive layoffs has been the pressure from the investors on profitability and the efforts to cut cash burn.
Like
Sri Vikraman, the co-founder of Games 24/7, an Indian-based multi-game platform which made it to the Unicorn Club this year, says that this is only to be expected.
To be honest, it sounds like the startup story is not real because now finally layoffs are starting to happen, and what is with the unicorn story if all these layoffs are happening? But to be honest, it's just part of the creative destructive cycle that you have with innovation.
Another startup founder opined that the competition was tough in the startup business.
There are risks of talent, there are risks of competition, there are risks of funding. But I guess overcoming all these risks to not only build a big business but also create massive impact is the joy of entrepreneurship.
2021 was the peak of funding for many startups, but from the start of 2022 we have seen over 5,000 employees rendered jobless. In fact, startup companies are now changing their direction to profitability and margin increasing as well. Just like how Mr. Vidit Atre, who's the co-founder of Meesho, pointed out, more layoffs are expected in the coming days. In Bengaluru, with camera person Kumar Shrija for NDTV.
So, are the brakes being slammed on the unprecedented growth of Indian startups? Is the tide turning, and if so, what is the fallout of this likely to be, and does this lull the lure of Indian startups? Joining us on Breaking News is Mr. Balasubramaniam, Vice President of Team Lease Services. We have Sadhna Rajput, who is the founder of Zoo Food, a startup. Ashutosh Seth, founder and CEO of Risebird, and Nasir Salim, managing partner of Flexi Capital, and Ravi Sutanjani, VP of Partnerships at Testbook.com, and Sanjeen Sani, Managing Director of A&B Auto India. If I have Sadhna Rajput, I would like to start with Ashutosh and Sadhna Rajput first, because there are startup founders on the show. So, of course, a pleasure to have you here with us. Before that, I just want to take a look at some information, Ashutosh. In 2021, Indian startups raised a record $35 billion in new funds. But in 2022, Indian startups raised only $1.6 billion till April. So that's the information, the big headlines that are coming out right now in all the papers. After more than a decade of a bull run that saw India mint 100 unicorns, Indian startups now staring at falling valuations, a slowdown in funding, negative sentiment turning, sentiment turning negative. Why are, first to you, Ashutosh, layoffs besieging Indian startups? And how do you feel? I mean, do you feel right now that you've missed the bus coming at the fag end of this decade?
Right. So I think fundamentally what is, if you see from a point of view of building a company, these are the things which have to happen in parallel, and not like, you have a bull cycle and then you have a sort of a bear cycle. When you are running a company, you have to have a dialectic operating. So you are constantly evaluating, what's going wrong. Let's start from a point of view of revenues. And so if you have a fake revenue coming up, or you are sort of doing discounts in your revenues, or let's say you have all sort of marketing expenses going on. So all these things result in a lot of negative sentiment is true, because a lot of this growth is irrational, and a lot of people who have shown exponential growth in the startup is because of the funding, and not because of the strong business fundamentals. So if this all rational sort of rationality is coming in the system, it is good for the system in my view. And
interesting. So you're saying it will separate the wheat from the chaff. It's actually good for the whole system to see this course correction. But I want to ask you, you're the founder and CEO of RiseBird, right? It's a Bangalore-based video interview platform. It works with remote hiring. And also you received an investment of, I think, over 4 crores from SAB Holdings. So congratulations for that.
Thank you.
But Ashutosh, the startup sector was a segment that thrived during the pandemic. It went against the grain then. And RiseBird, for you, is a good example here, because during the pandemic, organizations around the world were looking for new technologies, and as work went remote and went hybrid, you saw an opportunity and you went for it. So why are we seeing layoffs? Then is it just, I know you said its correction is required, but we're hearing that there's the fallout of the Russia-Ukraine war that has led to a slowdown in capital raising ability. Is it just that, or as you're saying, something more at the core, and this core correction was needed? How much of it is this whole international situation right now?
So I think it's a more of a course correction part of things, because the startups were raising crazy amount of capital without having a strong business fundamentals. And when you talk about RiseBird, we are profitable. We are not burning any cash. We are checking our cash flow on a daily basis. We are checking our cost unit economics. We are not giving any discounts. We are specializing. We are focusing. We are not doing any experiments. We are not investing in areas that we do not understand. We are not trying to be too quick, too fast. We are trying to get recurring revenues from the current customers. So these are strong fundamentals, and any founder who is not looking at those things or those KPIs, they are just simply, and any investor who is discounting it, they are simply up for course correction, and suddenly waking up to it is because blaming to any interest rate spike and all that. I don't think it's just sort of a scapegoat or something like that. But I feel it's a day-to-day thing for any founder to check how much money we have, how we pay the salaries, are we making any profit, do we have unit economics, do we have recurring customer, do we have specialization, defensibility, scalability, automation. All these things now people are talking, right? What we have done in the last 12 years is just spread the whole money in not having these efficiencies in the system on a day-to-day basis. So I feel this is a day-to-day job of any entrepreneur, and it cannot be done in a cycle, in a phase way.
All right. Sadhana Rajput also joins us. Sadhana, RiseBird managed to raise that first round of funding, but you're a new startup. You're really, really fresh. How has this affected you? Because this atmosphere that you're entering this industry, this segment right now is very different from what it was even a year ago, or let's say when RiseBird was looking for funds. How are you seeing things change for you as an entrepreneur?
Yeah, actually, first of all, ma'am, as you know, we are suffering from, last year, the COVID and the war is going on. So we are hardly affected for all the things. But it's very, I can say it's very, very strange experience for me. I'm new in market. So first of all, I'm learning a lot of here. I can say.
But how is the market? Are you finding it harder to raise funding?
It's ma'am. It's very tough task for me as Rising Word as told that it's very tough to improving.
Okay, let's bring in Nasir Salim, managing partner at Flexi Capital. But apart from that, you are an angel investor. So Nasir, with more than 60,000 startups in India, Prime Minister Modi had called this decade a techade, right? And he says new unicorns are coming up every few weeks. But April, I think, was the first month in more than a year that India did not report any new unicorns, which of course is a term for startups with a valuation of over $1 billion. Why do you think this was a course correction? Why do you think this happened? Is this necessary? Did we just misjudge the market size and set wrong expectations and chase valuations? What was the problem here?
Okay, great. Good evening, Sarah. Just to set the board right, I'm an angel investor aspirant. I like looking at companies, and I'm obviously a part of a few subscription based that I've taken for angel investing.
Lessons for you from this? Have you seen anything unfold?
Yes. So I'll tell you, Sarah, very interesting question, and I think it's best time to kind of ask this question. So there are three things that I would want to kind of mention here. Number one, I think this path to profitability is a very important aspect, Sarah, because we need to understand if you're looking at investing in companies, and if it's just basis, for example, a presentation or basis, a plan without actually looking at fundamental ratios of profitability, I think that's the big question here. Our learning is that all companies which have come in with predictable amount of business cash flows, we look at I heard one of your panelists just mention about gig costs, metric economics, unit economics. These are very interesting factors that kind of decide the fate of a startup in this entire startup ecosystem. Now, I'll give you certain statistics, Sarah. We've had a lot of companies who started out, more than 100 companies which have come out in the market, kind of raised money, but most of them have not done very well. I mean, even in terms of expectations, because, there is a lot of slip between the lip and the cup as far as expectations is concerned. There is enough government push in the sense to kind of give you a 3-year moratorium in terms of taxation advantages. This entire startup ecosystem is being pushed by all state governments as well. It's not only the center. It's a policy that even state governments are following. But the challenge remains is basically when you're looking at this from a investing and from an expansion perspective, how easy is it to get to profits? I think the path to profitability is something which is very, very important. Number one. Number two, a quick one, Sarah. I would want to say that this entire ecosystem of startups is actually pushed down with very out of the box evaluated numbers. The numbers that are evaluated, I mean the evaluation business is something which is in itself which needs to be kind of given more importance to. How you are evaluating or valuing businesses of these startups. If it's basis a certain number of consumers, a certain number of metrics that may not fall in that profitability line, then they will fall flat, and you will not see money at the end of the day if you invest in them. So in my opinion, I would want to just keep going back and saying we need to check the basics of the entire startups, why they are, what they are promising to do, how is it going to be that they will achieve this goal from an ideation perspective to execution, and most importantly, the journey that they're promising in terms of to their investors, to their seed money, to angel investors, and what is it that they can kind of bring to the table in terms of profitability. I keep going back and mentioning the word profitability because that is the single most important factor that will determine which of these companies will survive.
All right, talking about profitability then, Balasubramaniam, Vice President of Team Lease Services, as investors now turn towards profitability and cash conservation? Are more layoffs only to be expected? And if so, how should young people view jobs in a startup? Because many are just excited by the fast-paced work environment, the prospect of earning attractive stock options at an early stage. Should they also be prepared for less job security that they may not have weighed in thus far?
Yeah. I'll just start off with a little bit of macro context setting here. See,
sure.
After 2 years of the pandemic, pent-up demand and pent-up inflation hit us like a tsunami, and this war has only compounded the problem. And when a war of this nature is afoot, everyone loses, including the side that is claiming to be winning the war. Now, commodity prices are particularly shot up, and there is a spillover effect on everything. In such an environment, the natural response from governments is to raise interest rates. And the signal is to save, not to spend, because there is fear of recession afoot.
Yeah.
Consequently, the biggest impact will be on high-risk investments, as the appetite for such high-risk investments also tends to go down. And as we can see, there is definitely an impact on startups because these are high-risk investments at the end of the day. And also on cryptocurrencies, we've seen a deluge of cryptocurrencies failing in the last few months. And that's a direct consequence of this. Now, to be a safer investment or to project themselves as a safer investment, startups have a need to show better fundamentals, better governance, and importantly, good unit economics. They're not going to be funded just for crazy, insane top-line growth that comes at any cost, right? And to be able to be more attractive in this environment, that's the path that they need to pivot to. And that's eventually going to happen in the long run anyway, just that this environment has accelerated the move towards that. So I look at this only as a correction. A lot of people are projecting this as if it's doomsday just around the corner. And this kind of projection is bound to happen. Capital markets correct themselves. Even gold prices correct themselves. So why not the startup ecosystem? And by the way, there is another side to the coin as well, to answer your question, right? There are still certain profiles which are very much hot in the startup ecosystem, like say delivery partners, right? I mean, I'm part of a staffing company, the leading staffing company in the country, so I can vouch for that. Tech talent is still very hot in the startup ecosystem. So even certain blue collar profiles and warehouses are also very hot in the market even now, while the demand for incremental hiring of such profiles has slowed, but it's not like they are not in need anymore. And there is a big difference between them, right? Okay. So, like I said, this is a pause. This is definitely not a reversal by any means. I do understand that there is a lot of pandemonium simply because we've had 1 month with no unicorns, but let's all understand that we've had 40 plus unicorns last year and we didn't have as many unicorns in history up until that point. So last year was the aberration. This is the rule.
Last year was the aberration. Good to see, good to hear your optimism on the show. But Sanjeen Sani, could you come in here then? So if rationalization in funding could lead to some startups winding up, but is this a necessary correction? Will that in the end, do you think, weed out the quality companies from the rest?
Yes, Sarah. As we know that the lifeblood of any business is finance. So profitability is the most important thing we see as any business investor, So if a company does not have profitability, it will not last long. So with many startups, we do see that they lost that credibility. We do give a window of, say, about an year when you have a break-even point. There is no profit, no loss. But even after that, if you constantly are looking for fundraising, that is probably not a good sign. So you have to have that credibility, to give back to your investors. Otherwise, nobody is going to come forth. So the biggest problem, I think, the thing was that the startups actually went from zip, zap, zoom. There was this, whole lot of people coming in with crazy sort of ideas, just getting into that whole startup field. Well, of course, this is a correction time. And I would say, yes, it is more like a pause. I agree with my co-panelist. Because then, of course, there has to be a realistic business plan. There has to be a realistic financial plan to go ahead in any sort of business. So yes, right. We do need that correction.
All right. Ravi Sutanjani, then please come in over here. So this is a pause. It's a correction, a necessary correction. But take us, what do you see going forward? Is the worst for Indian startups yet to come? Does that mean more layoffs? Does this mean a unicorn slowdown, a startup shutdown? What do you see and what's the solution?
Thanks for having me, Sarah. I think definitely I still feel worst is yet to come. At the end of the day, it's all about profitability and sustainability. I mean, in the last year, April only, we have seen 8 alone unicorn in the April 21 rise. But see the ecosystem, how it has changed in the last 1 year. And I would definitely, brought to these 3 core fundamentals. Again, A is a competition. Building a startup and business in India is incredibly difficult, and not into just India. I think look at the global spectrum and you will realize similar pattern we can see in the US and European market. Similarly, it's all about ups and downs. At any given point of time, if someone invests in your business, they expect ROI, return on investment, and it's a very risky investment, to be honest. Now, when you look at the other side of a spectrum, you have sustainable businesses where we haven't seen any layoffs. For reference, we are still hiring for more than 200 plus openings. Anyone can apply at our career page. We are looking at, one side of picture. Again, totally agree with another panelist when he mentioned that, it's a short-term lived impact, and definitely there will be an optimism. We have more than 60,000 startups. It's not just, India IMC situation, but globally we can see similar pattern. Aggressively hiring was another reason. I mean, when you are raising capital, you need to expand fast, you need to build and iterate fast. So at the same time, a lot of startups have hired at very aggressively, so we are seeing the reconciliation. So it's bound to happen. It was inevitable, but yes, there are a number of factors which is causing this right now.
Bound to happen, inevitable. But I think what most of our viewers are concerned about is jobs. So I want to go across to Balasubramaniam. Last word to you. Interestingly, what you said, yes, there's a pause. Yes, this was to be expected. Yes, there are layoffs happening, but there's also a demand for jobs. So I want to ask you, we're seeing a rise in wages, a strong rise in wages across the board in tech companies like Infosys and TCS. At the same time, we're seeing these layoffs in startups. So, last word to you, are there certain types of jobs that are at risk in the present environment while employers have trouble filling other jobs?
Yeah, I guess, like I said, roles like frontline sales, working in the supply chain in general, working in warehouses, factories, etc., manufacturing setups essentially, and tech talent, because you're part of the production chain, right? I mean, you are part of the supply chain, you're touching the product. So such roles will never really go out of fashion, to be very honest. Some of the support functions are not as much in demand now as they used to be earlier, because there isn't really any need. When you're not really expanding like crazy, you don't really need as many more people in support functions. And secondly, over the course of the 2 years of the pandemic, we've learned that automation is the future, right? You have to digitalize yourself to survive and to thrive in the future potentially. So many of these jobs have been automated away as well. So we don't really see too much demand for support functions, but then if you're part of the core, you'll always be in demand. You're making the product, or you're delivering the product, or you are, you are the one who's selling it in the market to consumers. You'll always have to be in
have a job.
There'll always be someone who sells. There'll always be someone who buys.
All right. Well, the question tonight was, are these the first signs of a painful future awaiting many Indian startups? Thank you all for joining us with your breaking views.